Rand, a little bit of weakness coming through, R6.63, R6.64. That was down from about 6.59 earlier this morning. Do you see this just as a temporary respite? Because we have seen that dollar recovering slightly against the euro at the same time.
Stephen, I think the dollar's moved so quickly over the last few weeks that a pullback is necessary at this point in time, and I think we probably in the short term will see some further weakness coming through in the rand.
Well, we hear all sorts of reasons for that dollar strengthening a little bit. Perhaps the death of Osama bin Laden over the weekend, that's being given as one of the reasons for that. Of course, commodity prices also coming under pressure, and that does affect the rand, doesn't it?
Well, I think as I said, the dollar's moved a long way against most currencies. A pullback is not untoward at this point in time. I'm not sure the death of bin Laden has as much to do with it. It would create some positive sentiment, but I think that battle is far from over, quite frankly. And I think right now it's just a bit of profit taking being put on the table, and that's what we're seeing playing out in the market.
Longer term, what's your expectations for the rand? Because there are two schools of thought. One saying that we could see the rand strengthening to 620, breaking below that. We could even see it in the high fives.
Well, I think if we want to answer the question about the rand, I think we have to turn our attention to what's happening in the US. They certainly their problems are coming to the fore right now. Seen a lot of noise around their deficits. In fact, a couple of weeks ago we had almost unprecedented action by the ratings agency when they put a negative watch on as far as US bonds are concerned. So that's going to gain a lot of attention. Despite the short-term machinations, I think we will see in the future some further dollar weakness. I think the main macro reason for that is Europe is attempting to deal with its problems. The US hasn't even started yet. They can't come to a deal as far as the debt ceiling is concerned. I think the dollar's in for some further weakness, I have to say, and that will filter through into rand strength.
And also looks like the Fed is going to follow its loose monetary policy at this time, although we could see the end of quantitative easing by the end of June.
Well, I think we will see the end of this round of quantitative easing, except we must remember they're going to reinvest the coupons of those maturities. So they will continue to bolster the bond market. They're going to keep short rates lower for longer, as Mr. Bernanke pointed out last week. And the reason for that is, they wouldn't want to do anything at this moment that's going to derail the recovery that is taking place. There's still a lot of water to flow under that bridge. Hence my bearishness for the dollar at this point.
David, we had PMI data out of China this morning. We had our own PMI data out this afternoon. We've had US ISM numbers as well. And it looks like our number came in quite well. China disappointing a little bit, and lots of monetary tightening in that economy, which seems to be having some sort of effect there.
Well, absolutely. They're very concerned about inflation, and we have seen the tightening in the last few months. That will have a slight drag on the Chinese economy. I think of bigger relevance to South Africa right now is the employment numbers that we saw come out earlier this morning. Still a big problem for South Africa, and of course the authorities are trying to tackle that with some kind of reserve building exercise, but I think in the background they would like to see a weaker rand. So a lot of noise in the market at this point in time, premised of course on unemployment, and that's a global phenomenon right now. Job creation remains at the forefront of all monetary action at this point.
Well, of course, employment also came through in our PMI data, where we saw that employment index still below the 50 level. Although despite the strong rand, manufacturing sector seems to be doing okay.
Yeah, one must remember that the commodity prices have risen dramatically, and of course that's helped on that front. But from a pure growth or job growth perspective, I think the manufacturing sector would certainly like to see a weaker rand. Whether we're going to see that, I think it's some while before we see the rand weaken substantially enough, in any case, to create some jobs.
Well, we also saw India raising interest rates by 50 basis points this morning. The Royal Bank of Australia holding off at the moment. Just given where the rand is, with unemployment back at that 25% level, what do you think the Reserve Bank's thinking at this stage? Do you think they would rather keep the rand there so they can try and boost the economy and boost jobs?
They've got a tough battle at this point in time. The historical mandate of inflation fighting, they've got to do that. But of course, that mandate has evolved over the last few months. They are very cognizant of job creation. It's a tough line that they're going to walk, because commodities are creating inflationary pressure. Commodity prices, soft commodities, are creating inflationary pressure. It's a tough line. We do see them raising rates, but not dramatically. Perhaps in the second or third quarter of this year, we'll see the first rate hikes coming through.
So you're expecting a rate hike as early as this year?
I think so. In South Africa, yes. Yeah.
How do you tie that in, though, with the private sector credit extension numbers out last week, which show there is still very little demand out there at this stage? It's really cost push pressures here.
Well, it is, except inflation is beginning to creep towards the upper end of the band right now. So I think the Reserve Bank will be conscious of that without affecting employment or unemployment too much. But they need to be vigilant as far as inflation is concerned. The minute we see it rising towards that upper end of the band, or in fact breaching it, that's where I think the rate rise is going to come from.
And the rand in the meantime, where would you expect it to trade in the short term?
I think we're in that range. 655 remains a very, very key level at this point in time. We have seen it try that level last week, albeit very, very briefly. So I think that's a key level for us, 655 right now. A breach of that, we would see the rand possibly trade down towards 620. But for the moment, I think while we've got all this noise in the global economy, while the dollar's trying to recover a little bit, I think we will be stuck in the sort of 655, 675 range for the meantime. But 655 remains very key for us.
And do you think with the rand at these levels, we could see the authorities coming into the market a little more aggressively?
I think we have seen them coming to the market a little bit more aggressively. At this point, they're not having much of an impact. Although on the trade-weighted basis, the rand has weakened a little bit. That's where we're seeing the impact. It's very difficult just to measure the rand against the dollar when we've seen the dollar weaken so badly globally. So on a trade-weighted basis or against our other trading partners, we have seen the rand weaken a little bit, and that's where we're seeing the impact.